Hello and welcome to Pakistan TV Digital. This is Faraz Saeed, and today I'm being exclusively joined by the Finance Minister of Pakistan, Senator Muhammad Aurangzeb. Thank you so much for taking time out, sir. So the first question is, let's talk about the breaking news that the world is talking about, which is a great news of not just for Pakistan, but the global economy, Pakistan's economy. The peace agreement that has been finalized between the US and Iran. How significant do you think it is for the global economy, and not just the global economy, but for the Pakistan economy?
Yeah. What I said this morning is that indeed it's a very significant day. It's a very proud moment for Pakistan and a great moment for global economy. It's absolutely great to see the way our Pakistani leadership is being acknowledged. Prime Minister Shehbaz Sharif, Field Marshal Saeed Munir, in the first instance for the trust and confidence that has been reposed in them, both by US administration and the Iranian leadership. And even more importantly, the way they have led the mediation efforts with earnestness, with zeal, with fervor, are not giving up. And what we have just seen is things going through the finishing line. So I think it's a huge relief, and you have seen all the relief rallies, not only in Pakistan, but sort of world over. All major stock indices and of course the oil being down. I know PSX was up this morning. I'm not sure exactly where it is. I've just come from the Senate Finance Standing Committee. But more importantly, since the time this conflict started, now almost sort of 3 months back, Pakistan has negotiated what I call the first order challenges extremely well as whole of the government approach. There were no shortages, there were no law and order situations, and yes, we have had to deal with the increase in petroleum price, which has sort of put pressure on our import bill, but I would say managed very well on a relative basis when we look at Southeast Asia, even some of the more advanced economies. Now, what this does for Pakistan certainly is that the second and the third order impact, which could have been in the context of further pressure on GDP growth or further pressure on inflation, I wouldn't say has been eliminated, but it's certainly been mitigated. And the reason I'm saying it's been mitigated because the reality is that the energy infrastructure has been hit. So it will take a little while for situation to return to normalcy. It's also, I've just heard the news that the State Bank has kept their policy rate unchanged. And from my perspective, this is fantastic news because this also shows their view, although I would look at the MPC statement later on, their view on sort of a forward-looking view on the inflation side. So I would say great news all around.
Okay, so there's a chatter that Iran may get some relief on pre-conflict sanctions. Do you think if that materializes, what is going to be an impact on the bilateral trade between Iran and Pakistan?
Yeah, I think it's sort of premature to mention that. Let's see when this deal is signed and MOU is signed, what kind of framework it comes up with, and what are sort of the first areas that the two countries are going to focus towards. But if indeed it moves towards reduction or total removal of sanctions, I would say there's a lot of opportunity in terms of sort of bilateral trade. And then, of course, I think the countries can look at potential investment opportunities on both ends.
We've set about 8.2% inflation target in the next fiscal year. Now, if there's an ease in the conflict and if there are ease in sanctions, How will that make your job easy? Because again, there's a possibility that inflation may come down from 8.2%.
Yeah, and it's not only inflation. As I said, there's many other things, and the impact on our current account. If we were sitting here back in January, you saw State Bank's estimates at that point in time, which were pretty close to Ministry of Finance and Planning, that the GDP growth for this entire fiscal year was being looked around anywhere between 3.75 to 4.75. So pre-conflict, I would say we were quite confident that it will be north of 4%. And because of the conflict, obviously we had to revise it down to 3.7%, which is the stated number for this year, and then 4% for next year. Now, if this goes away, certainly there can be a possible upside associated with next year's growth number, because LSM is doing well. If that trajectory continues, and it's a broad-based discussion. Similarly, agriculture moving in the right direction. So I think there's an upside there. In terms of inflation, you look at end March number, and then you see the spike, which has been primarily imported inflation. Because when the petroleum prices go up, and given a large index of petroleum imports into Pakistan, obviously it has had an impact. And therefore you saw the policy rate actually moving from 10.5% to 11.5%, although it was moving only in one direction, which was south. So I think if, inshallah, if as this moves from ceasefire to this MOU, and then a framework agreement is signed, it bodes very well for the overall macro situation, for the overall fiscal and external buffers which will be available, which in turn can be used to further spur growth.
So Pakistan has played a very key role, led by the Field Marshal, led by our Prime Minister, in the global diplomacy, and we've achieved peace. Do you see Pakistan playing key role in the global economic sphere? What's your take on that?
Yeah, I think this conflict sort of easing out will further help the momentum that we already have. So, the discussions that we have had with all our partners, whether it's GCC, whether it's China, whether it's US, as you know, the Prime Minister has been very clear and vocal that now it's all about trade and investment, not about aid and aid flows. So even his recent visit to China, which is, very much a B2B type of discussion, I do think will help both our export side, but more importantly, the investment. And I would say in the first instance, with respect to the local investors, right? Because if you see this year, and I was virtually I joined the ceremony of Service Long March, the listing of their of equity, which was 17 times oversubscribed, etc. And if you see this year, there have been 11 IPOs. Last year there were 3 IPOs. When people are committing capital, they are really showing confidence in terms of where they want to do with respect to their investment flows. So I'm actually, we have the tailwinds now with the PIA privatization, with these IPOs, with the kind of budget that we have announced, which is very much focused on exports and everything that we've done there with respect to reducing taxation and bringing in more financing opportunities at affordable rates. If you put all of this together and you remove this conflict from the scene, and as I said, it will have some lingering impact, but all of this combined bodes very well for next year.
So what we've seen from macroeconomic indicators, the economic review, and now the budget, we've seen that Pakistan has been able to achieve stability. We are in the stability region. What is your plan to achieve growth or transition towards growth?
Well, that's what I referred to when I talked about the budget which was presented on Friday. Um, we have set a very clear direction of travel from stabilization, which you just referred to, towards sustainable, which equals export-led growth. And therefore, what we've seen, some of the measures that we have taken, where we have eliminated the advance tax, where we have eliminated the super tax on exports, and we have sort of on IT sector, whether it's freelancers, whether it's all institutions which are registered with Pasha, etc. We have maintained the fixed tax regime at 0.25%. So all of this is sort of in the taxation domain, but on the financing side as well, right? So we have committed subsidy in the budget so that all the exporters can get continue to get funds at 4.5%, while the policy rate is still 11.5%. So I think on a combined basis, we have given a very clear direction. And that's very important because, the bane of our country has been, the twin structural deficits. On the fiscal side, we are in a good place in terms of the lowest fiscal deficit for a while. We have a primary surplus. And then getting our FX reserves and getting our balance of payment position, which have been clearly helped by remittances, which are now being increasingly helped by the Roshan digital account, additional inflows which are coming in. But structurally, we have to grow our exports. So we have done, from our side, a lot of interventions which should help spur export growth next year.
Okay, so there has, Pakistan has been sailing through successfully through the IMF program. Where are we right now when it comes to the budget with the IMF?
Yeah, I mean, everything, because we are in a fund program, there's a continuous consultation process. And it's everything that is being done with their consultation. As I said, because we are in a 36-month EFF program, and that's how we plan to move. We are very committed to stay the course.
So quick jump to the minerals question before our last question. So there has been a lot of chatter and there has been a global recognition on the potential that Pakistan has on the mineral front. There has been global engagement where global companies want to invest in Pakistan's mineral resources. What is the exact potential? We've been seeing trillions, 6 trillions, 4 trillion. If you could, walk us through the exact number, and are there any potential deals that Pakistan is set to sign with global companies?
I think we should just try to stay with what is achievable in the next future and in the next few years, rather than talking about the potential and all of that. I'm actually a very practical and pragmatic person, so I just want to say, in the first instance, let's get Recodec through the line, right? It's a huge upside which is associated with Recodec in terms of copper. Copper, as you know, as the entire world transitions onto the EV side, copper is the and our 80th belt is the supply side response to that inevitable shortage which is going to happen. So getting Recodec going, the syndication is in place. You've seen Barrick Gold again very recently. Their management was here and they committed. So from my perspective, getting it through the finishing line is absolutely critical before we start talking about the entire potential. Because this one project itself, in first year of commercial production, is going to contribute about roughly $2.5 billion of exports. Now, you put it in the context of about $30 billion, so almost one project gives us a 10% jump when it comes into commercial production. So no, it's absolutely critical. The upsides which is there in sort of minerals and mining, AI, IT, agriculture, these are all areas which hold huge potential for Pakistan. but the ball is in our court to do something about it. And that's why, one step at a time, and let's start realizing some of these bankable, investable projects.
So, sir, about the budget, beyond technical jargons, what is there for the common man? What is the actual deliverable for the common man? And B, we've provided subsidies. Will the IMF be fine with those subsidies?
Yeah, I think you've come back to the fund program. And as I said, we are committed to stay with the fund program and in ongoing consultations with them. Subsidies we have been providing for some time. It's a standard line item in our budget. In fact, we are trying to reduce the subsidies. If you see what we call tax expenditures, year on year, it's actually come down. The more important thing is, where are we utilizing this money? It's going into industry, it's going into export sectors, it's going into what was a disproportionate burden on the salaried class. And as far as I'm concerned, this is not technical jargon. If the industry goes forward, if the export industry moves forward, that is going to create employment, that is going to create opportunities. I mean, I'll mention the Service Long March. This is a joint venture between China and Pakistan. They are going to export $100 million of truck tires next year from Pakistan. So as the IPO is going to go into, and the proceeds are going to go into now car tire manufacturing. So I think this is all important, that all of this has to trickle down into sort of more employment and opportunities. And then hopefully this year, we have given a bit more relief to the salaried class, as well as you said, the common man. But actually, the last year we did make a very earnest effort of salaried slabs at the lowest rungs. We reduced 5% to 1%. People who were earning between over 600,000 per year, and then we reduced 15 to 13%. But from my perspective, they were sort of the silent majority of the salaried class. But in any case, this year, the surcharge going away, and then all other slabs coming through, and then whatever we have done on the agriculture side in terms of financings. And this time, the financing, obviously agriculture credit has gone up year on year. But these are all interventions which is going to ultimately help the common man. Zarkhezi financing, for which we have said we are going to have 300 billion of financing which is available. This is for the small farmer, number one. And secondly, this is collateral free. So we are not going to ask for further or collateral from the small farmers. That's where the banks are going to step up, move the Aartis out of the picture. Similarly, PM's youth loan program, a little over 100 billion rupees, is focused on agriculture for youth. And from my perspective, whatever we can do to provide the ecosystem to our youth, that is the real enablement for sort of the common man and people and these young men and women, starting with the freelancers. I'll give one last example. A lot of them are doing their coding at $10 to $12, right? So on one side, there's a real danger, because if AI comes in, etc., a lot of these entry-level aspects are going to go away. So on the other side, the huge upside, if we reskill them in terms of blockchain and AI, they can start coding at $50 to $250 per hour. And then whatever Minister IT, Shahzad Khaja, is doing, and the trainings which are being provided, all of this is going to, inshallah, add up as we move forward.
Thank you so much, sir.
Real pleasure. Thank you.